We want to bring in Ryan Ellis from Americans for Tax Reform and Mark Weisbrot from the Center for Economic and Policy Reform. Okay, guys, great to see you. This has become a very heated issue. A lot of anger really directed at a lot of these banks in terms of their bonuses, in terms of their profits. But, you know, I'll start with you, Mr. Ellis. I mean, you look at Goldman Sachs, for example, a bank that has already repaid its TARP money. How much blood here do you think the government really wants?
Well, it becomes a question of when is the government being counterproductive with this. There's a very basic principle that if you want less of something, you should tax it more. We saw that in the 1970s with oil windfall profits tax. We ended up with less oil. Part of the Bush tax increase from 1990 was a luxury tax on yachts. What ended up happening? The yacht industry went under for a couple of years in this country. What will happen in financial services? If you put a windfall profits tax on banks and financial services firms, you're going to end up with fewer financial services products. It'll be passed along to the poorest people, and it'll be less available to them.
Mark, I thought the purpose of this whole bank recovery was to get them profitable so they could make another business loan in my lifetime. Why tax them?
Well, first of all, they don't have to have the record profits that are now even a larger share of corporate profits than they were during the peak of the bubble years, okay? So I think aside from the fact there's a lot of anger out there, you know, 200,000 people a month still losing their homes, you know, unemployment worse than any time really since the Great Depression. And so people want something done, but I think the one thing Ryan said, I agree with, that if you want to tax something, you want to have less of something, you should tax. That's why I would say more efficient than this would be a financial transactions tax. And here you could have something with where it would actually benefit society, because it wouldn't affect the investor, you know, the normal investor. You could have a tax of maybe 0.5%.
But what you're talking about is discouraging capital markets from functioning here, Mark.
No,
essentially that's what you're doing.
You're discouraging wasteful trading, speculation. We don't have to have a huge bloated financial sector. You know, the people forget the purpose of the financial sector is to act as an intermediary. That's the textbook purpose. It's supposed to channel savings from households and firms into productive investment. Trading is not an end in itself. And so you could do much better for society and also get $100 billion of revenue a year by simply taxing financial transactions. It would not affect the ordinary investor. It would be too small for most people to notice, but it would discourage the constant and speculative trading that really doesn't serve any economic purpose.
Ryan, what would a financial transactions tax do to Trish's concern about capital formation, and let me add another one, international competitiveness?
Well, it would do a couple of things. First, he's correct that these financial firms really are intermediaries, and what they're going to do is pass along the value of this tax all the way down the chain. Everybody who has a 401k and an IRA are going to become a victim of this. We need a healthy, functioning capital market in order to have stocks, bonds, mutual funds, all the things that we hold in our retirement accounts. If we want to have international trade and international financial flows, as you mentioned, Larry, that needs to happen without a nick of taxes happening every time that somebody pushes a button.
And I want to go back, hang on, to what Larry originally said, which wasn't the entire goal to get the financial system back on its feet so that it was working again, so that people could go out and take mortgages, so that people could access credit card loans, that debt markets would function? And why would we suddenly want to try and hurt that from happening, Mark? I mean, actually, let me throw it at Ryan. Do we run the risk that this is going to become too much of a political problem and not enough of a one that we're focusing on from an economic prism?
Well, this is a simple case of you reap what you sow. If you invite the mafia in to protect your business, you shouldn't be surprised when the mafia starts trying to shake you down. That's exactly what happened here with TARP. There was a crisis in the financial services sector about a year ago. The government was largely invited in, I think it's fair to say, and now people are complaining that the government wants to take a little bit extra, get a little more tax revenue, get something on the side. This should serve as an object lesson to everybody else. If the government comes here to help you, you probably should tell them to turn away.
Okay, we're going to leave it there. I think that was an interesting analogy with the mafia. All right, guys, thanks so much for joining us.